And welcome back. It's Jason Walter here. Hope you guys have an awesome day, by the way. In today's housing market update, I'm going to give you an update regarding mortgage application numbers because they have surprisingly increased for both purchases as well as refis. I'm also going to give you an update regarding mortgage rates and housing affordability. So with that said, let's go ahead and dive right into the video. I have a lot to share today. So this is according to the Mortgage Bankers Association, or the MBA. They just released this report on the 15th, which is today at the time of this video. They say mortgage applications actually increased 6.6% from 1 week ago. And this is a survey for the week ending June 10th of this year. So the refi index, which is a measure of the amount of people submitting applications for refis, actually increased 4% from the previous week. This is the first time in a long time I've seen the number of applications for refis increase. And this, of course, because mortgage rates have been increasing greatly. However, though, compared to 1 year ago, we're still down 76% from a year ago here. The unadjusted purchase index increased 18% compared to the previous week and was 16% lower than the same week 1 year ago. I'm actually very surprised to see that the total number of mortgage applications for purchases has increased 18% from 1 week ago. By the way, that's unadjusted. The seasonally adjusted rate only increased by 8%. And that's because last week's results include an adjustment for the Memorial Day holiday. In any case, I'm really surprised to learn that more people are submitting loan applications for purchases right now, given the fact that mortgage rates are so high right now. So at the time of this video, which is the morning hours of the 15th of June, the average 30-year fix, according to the Mortgage News Daily, of course, this is for people with exceptional credit. The average right now is 6.28%. That's a big increase compared to 1 year ago by 3.23 percentage points or 323 basis points. Also, take a look at this because it's absolutely mind-blowing. Over the past 3 days, mortgage rates have increased almost 75 basis points. In any case, going back to the report here, purchase applications were down more than 15%. They were down 16%. Amid ongoing inventory shortages. Of course, if we have a lack of houses for sale, people are not seeing any options of what they want to buy, they're going to be less motivated to submit loan applications. Also, we're seeing affordability challenges, and that has cooled demand coincided with a rapid jump in mortgage rates. So in regards to a lack of houses for sale in the US, even though we're starting to see this increase of inventory, this is on Redfin's website, we're down 7.79%. At the start of this year, we were down 20.54%. So inventory has been approaching 2021 levels, but still, look at this. We have 632,000 houses for sale for the 4 weeks ending June 5th. But compare that to 2019, we basically had double the share at 1.2 million houses for sale compared to now only 632,000. Also, what I found to be really interesting, and you guys should be aware of this, is that this increase of housing supply is not really from a giant increase in new listings. So new listings right now are still basically flat compared to 1 year ago, down about 1% from 1 year ago. So we're not seeing this giant increase in new listings. However, what we are seeing is a decrease in home buying demand because we're seeing a decrease in pending home sales. So pending home sales are down almost 8% compared to 1 year ago. And this is why we're seeing this small increase in housing supply overall across the United States. In regards to housing affordability, I want to share some updated calculations with you guys. If you guys follow the channel, I went over this for a $400,000 house. So if you were to buy a $400,000 house at the beginning of this year, 2022, January 2022, your rate would be 3.3%. That would give you a principal and interest-only payment of $1,400 per month approximately. Fast forward to now, again, today at the time of this video, which is the 15th, rates, by the way, have not been updated at the time of this video, but yesterday's rates were 6.28% for a $400,000 house. That would give you a $1,976 housing payment compared to $1,400 at the start of this year. I also noticed that the National Association of Realtors just released housing affordability numbers yesterday at the time of this video here. It says compared to the prior month, the monthly mortgage payment increased by 14.5%, while the median family income increased only by 0.7%. This average monthly mortgage payment is based on current rates as well as current home prices right now. So home buyers looking to buy a house right now, it's going to cost them 14.5% more now compared to 1 month ago, given the fact that home prices have increased and of course rates have increased as well. On top of that, compared to 1 year ago, affordability declined in April as the monthly mortgage payment climbed 45% in 1 month and the median family income rose by 2.5%. And of course, that small increase in family incomes is basically being wiped away by almost record high inflation numbers. And because we're seeing this big decrease in housing affordability, this is because 1 year ago, our average rate for a 30-year fix was 3.11%. And as of April, it was 5.05%. Also, home prices increased almost 15% compared to 1 year ago. And here's a chart showing the big decrease in housing affordability in the US. As you can see here, housing affordability has gotten worse for 5 consecutive months because of all these headwinds that home buyers are facing right now. Also, according to the National Association of Realtors, a home purchase was actually unaffordable for a typical first-time home buyer intending to buy a typical house in the US. First-time home buyers typically spent 25.6% of their family income on mortgage payments. And by the way, I believe that's only principal and interest only, making a home purchase unaffordable for the average family in the United States. And here's a really good graphic depiction showing the giant increase in monthly mortgage payments for would-be homebuyers right now. And as you can see here, here's a graphic depiction showing the average monthly mortgage payment for would-be homebuyers. As you can see here from April 2021, basically through December of this year, that payment was more or less flat. But given the fact that home prices have increased greatly, and of course rates have increased greatly as well, this has been basically going straight up. And the National Association of Realtors went on to say the following here: the cost of purchasing a house continues to increase and become more difficult for all potential homeowners, especially for first-time homebuyers. Inflation, of course, is having an impact on the economy as a whole, and the mortgage rate hikes are making affordability more difficult. Mortgage payments are rising fast, and income growth cannot keep pace. In other words, it's not sustainable for home prices to increase by 15% and family incomes only to increase by 2.5%, given the fact that inflation is over 8% right now. And here's a table I pulled from the National Association of Realtors website here. So right now, the median sold price as of April, May's numbers are going to be released here in a few days, I believe towards the end of next week. In any case, April's numbers, the median sold price, $397,000. Compare that to 1 year ago, we were at $346,000. So basically, the same house has increased in value approximately by $50,000 in 1 year. However, here's the headwinds that home buyers are facing. 1 year ago, rates were at 3.11%. Back in 2020, the average was 3.17%. In 2019, 4.04%. Right now, though, according to this graphic here for April, the average is at 5.05%. And this is why the average monthly mortgage payment increased from almost $1,200 per month to now over $1,700 per month. And this, by the way, is a 45% increase compared to 1 year ago. Also, when you look at the monthly payment back in 2020 and also in 2019, we're still well above levels right now. So in 2019 through 2020, it was just over $1,000. And right now, again, just over $1,700 per month for principal and interest payments. And even though home prices have increased approximately 15% compared to 1 year ago, we're not seeing that big increase in incomes though, right? So 1 year ago, the median family income was actually just under $88,000. Now we're just under $90,000. And that's why the payment as a percent of income that's required is at 16% 1 year ago and has now increased to 23%. Also, the income required to buy the average price home in the United States is basically $82,000 right now. Compare that to 1 year ago, it was only $56,000. Therefore, this is why the affordability index is at very, very low levels at 109.2, far less than 2020's average, as well as 2019 and 2020. So comment below with your biggest takeaways from today's video. Also, if you got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you in the next video.